Europe, stocks have bounced back after yesterday's sell-off. There is speculation that Greece will meet the requirements for more bailout money and avert defaults. Joining us now is Duran. He's the CEO of United Capital Financial, and some of that optimism spreading here in the U.S. We're seeing a 1% gain really across the board, Dow, NASDAQ, and S&P. Joe, is it right to get optimistic right now?
I think generally we were very, very oversold and not a lot of news to really drive it. We've got a lot of long-term news that's coming that's of a lot of concern. But frankly, we had gone down a lot and we're recovering some. I think we'd priced in a very likely recession coming, and now there's a question whether that's actually going to occur or not. So a lot of long-term uncertainty, and that's what's creating a lot of the turmoil. So I think the European mess is still going to be hanging over us, and the next few months we're going to shift toward the tax code focus, which is going to be the next battle that will create some uncertainty in the markets.
Yeah, well, you've got about $15 billion of assets under advisement at your firm. Are you changing any positions ahead of tomorrow's Federal Reserve decision?
No, we don't typically operate on a daily basis. What we really do is work with our clients and build and construct portfolios that will persist. But we have made some meaningful shifts over the course of the last several weeks. We've lightened up on gold. We've invested more on the dollar because we think, again, the dollar will stabilize compared to Europe. And so a lot of the bets that we had taken, the investments we had made, volatility, we've cut back our assessment of volatility. So we think a lot of the things that have been safe investments over the last year, like gold, like investing in volatility, those things are less certain now. And we've had the decline, and you want to be thinking now about where do you want to be invested if the markets do in fact recover, and if they don't, where would you like to hide out? So for us, things that pay you while you wait, high dividend payers, things like Procter & Gamble, the large cap consumer staples, very good place to hide, utilities, really good place to hide, and you capture yield and also participate when the markets are going up. And what you want to do is invest in areas where you're participating in the global growth that's occurring in the emerging markets. Even though they have slowed compared to where they were a year ago, you still have measurable growth in those economies that you don't have in Europe or the U.S.
Well, right now, and we just talked to the World Bank president about that perhaps being in jeopardy, that the developing world is right now being impacted by the slowdown in Europe and in the United States. But I hear you saying their odds are up there for a recession at the same time that we might see a bounce back.
Yeah, so what we see overwhelmingly, and we have a lot of business owners and executives that work with us, and what we're seeing from everyone is the sea of uncertainty. You know, the government refuses to put in long-term solutions to what we have, which are structural long-term problems. The shift of debt from consumers, which the government has taken on and now has taken on austerity measures, has a huge impact. And It's not going to get solved with short-term solutions. The other big issue, you can give a one-year tax holiday, but no one is hiring an employee that typically is a 4-year investment based on a one-year tax holiday, because your commitment is a long-term commitment. So these executives are saying, we can't, it makes no difference to us whether we hire somebody or not based on a 3% tax credit the government is giving us for 1 year. So again, short-term solutions instead of thinking about what will make America hire people again. And so again, it's a huge frustration for everyone. All this uncertainty, very few people thinking in a long-term basis.
Well, short-term, if you want to de-risk, rather than just gold, rather than just treasuries, you're also recommending ETF?
Yeah, ETFs like the dividend payers, Vanguard has a good one, low cost, high dividend yield, invest in the kind of companies, mega caps that we like a lot. We think you should be thinking about owning low maturity fixed income from corporates. Spreads widened in the chaos, and so you get a lot extra yield for not a lot of extra risk. Again, we just think that's a logical place to invest. Everyone has already expected yields to come down on long-term treasuries, so you should try to avoid that because it's priced in.
All right. Thank you very much.